Hello everyone. This is the pre-market report video for today, 25th March 2025 for the Indian stock market in terms of Nifty and Bank Nifty. If required, please pause and have a look. This one graph will tell all the story what happened so far this year 2025. This green curve is Nifty and Sensex. For most part of the January month, it was negative, but during the monthly expiry, it regained all those losses. But then again, Trump tariff uncertainty and Indian banks liquidity concerns all pushed down the Nifty and Sensex all the way down to 6.5% and maintained the negative 5% until 16th of March. Then in the last 6 trading sessions, it had a sharp recovery. Thus, officially now both Sensex and Nifty became positive this year. But mid-cap and small-cap haven't yet. Mid-cap down below 15%, but so far it recovered only 7%. Similarly, small-cap was down over 20%, but it also only recovered around 8%. So what it's conveying? Okay, there is a recovery, but half of that was due to expiry related short covering, and it's also indicating investors are not bringing the fresh money as investment. Please note, I'm not saying in future investors won't bring investment. What I'm conveying is the recovery at present happened was just a short covering. I personally think for investors to come back and invest fresh money, they need some level of certain US policy clarity, which I doubt investors will ever get in the next 4 years. But as we discussed multiple times, always expect the unexpected in the stock market. So anything may happen. Sector wise, only consumption closed negative. Other than that, all closed positive. PSU Bank and Defense outperformed all the other sectors as it increased above 3%. Overall, 58% of the listed stocks closed positive, and whereas 38% of the listed stocks closed negative. About institution, in the cash market, FII trade value back to their normal average value, and in more positive side, for the third day in a row, they were net buyers. Yesterday, net bought for 3,000 crore rupees, and DI was also net buyers, but they net bought for very marginal near 100 crore rupees. Then moving to derivative market, new open interest about 10% was added, and majority of those understandably it's put options. But here the twist was more number of put options was sold by FII, and both retail and proprietary traders bought those. So now retail traders in the total put option open interest side, they became the net buyers. On the other hand, despite yesterday's significant put options buying, still proprietary traders is massive net sellers. Almost they having net sold of near 1,60,000 open interest. Hence, at present for proprietary traders, as per their open interest position, they are holding 5.1% open interest as net bullish, which is less compared to Friday closing 6.1% net bullish position. But still 5% net also a significant positive position. Hence, proprietary traders makes more money if market goes up. And direct opposite to that, it's retail traders holding near 5% net open interest as bearish position. Hence, retail people make more money if market goes down. As always, retail traders inclined towards the opposite of current trend. Whereas FI wise, they are just playing a safe game, very much neutral. Index future market wise, no major change. If required, please pause and have a look. FI reduced their short position open interest by marginally, whereas proprietary traders added massive new long positions. Overall, same status as yesterday. Proprietary traders wants the market to go up. Retail traders wants the market to go down. FI was neutral but with negative bias. So those were the quick takeaway from yesterday's Indian market. Then coming to US, two major news media outlet, Bloomberg and Wall Street Journal, both of them released an article from their known US government source that Trump reciprocal tariff on April 2nd will not be as severe as investors are afraid. Rather, it will be much narrower, only on 15 countries which has massive trade deficit with US. Obviously 15 countries means for sure India will be one of those. But this narrow tariff info, US market took that as very positive, and all three major index opened super positive. In addition, around 10 p.m. Eastern Time, S&P Global released the US PMI data for March month. Here, the manufacturing PMI data contracted compared to February month. However, service PMI data increased massive 54. As we discussed multiple times, over 80% of the US economy is based on service sector. So service sector is massive important. That now increased significantly, which added furthermore positivity. So in the end, last night Dow Jones increased 1.42%, S&P 500 increased 1.76%, and Nasdaq outperformed all. It rallied 2.27%. In case of VIX, it decreased near 10% and moved down to 17.5 from around 20. However, none of that US market positivity was transferred to Indian ADR, neither to GIFT Nifty. As it is, all the ADR including Reliance GDR all closed positive of above 1%. But if you see the arbitrage, all of them indicating flat to some positive bias. Only HDFC Bank showing arbitrage of plus 1%. Just for info, at present, I don't believe any dollar premium exists for IT stocks. Then GIFT Nifty wise, early morning today, it traded at 23,749, equating that with the spot market. For now, it's indicating gap up opening of 30 to 50 points. As a summary, US market closed positive and global momentum is okay, but for some reason, GIFT Nifty and Indian ADR was not that much positive. Maybe all those positivity already might be factored in the yesterday's market. Moving on, yesterday as per stock open interest, JSL, Delivery, CG Power, SRF, BSE, M&M and Infosys are some of the stocks that got an increase in open interest along with a negative close, indicates the short build-up. On the other hand, Ipeca Lab, Apollo Tyre, Manappuram Finance, KPIT Tech, Havels and Eicher Motors are some of the stocks that got an increase in open interest with a positive price close, which means these stocks got the long build-up. About the things to look out, today early morning, Bank of Japan's meeting minutes is scheduled to release. Then during our market time in the afternoon, Germany's new car registration and business climate index data is due. And in the aftermarket hours for US market in the night, their conference board consumer conference data, new home sales data and 5-year note auction are some of the things we need to keep an eye out today. One more thing, regarding oil, it didn't change much. At the time of this video, WTI crude trading around $69 per barrel and Brent crude traded at $72.5 per barrel. Coming to technical, Nifty opened more than 150 points gap up at near 23,510 and extended the rally as the day progressed, then closed above 23,650, the highest closing level since February 5. Thus on the daily chart, Nifty formed a bullish candlestick pattern with minor upper and lower shadow. In addition, it climbed above all key moving averages by trading above the upper line of the Bollinger Band. Furthermore, the momentum indicators also showed a healthy trend with RSI increasing to 71 and MACD remaining above the zero line with a positive bias, all indicating positivity. Hence, the next hurdle is at 23,800, the previous swing high. If Nifty decisively surpasses this zone, it can negate the lower high lower low formation and open doors for 24,000 and 24,200 level. However, 23,400 200 exponential moving average is expected to act as a support. In case of Bank Nifty, it opened near 400 points gap up and outperformed Nifty, then closed at above 51,700, the highest closing level since December 18, 2024. Thus, on the daily chart, Bank Nifty also formed a long bullish candle with higher high, higher low formation for the 8th consecutive session. Bank Nifty decisively surpassed the 50% Fibonacci retracement, 54,467 to 47,703 with an expansion of the Bollinger Band. In addition, the momentum indicators also indicated a strong trend with RSI at 75 and MACD well above the zero line. Hence, Bank Nifty is now critically placed at the crucial level of 51,700. On the upside, 52,000 acts as the immediate resistance, while on the downside, 51,000 will be the key support zone. On the options front, the maximum call option openers was at 24,000 strike, followed by 24,500 and 24,100, with maximum new call option writing at 24,500 strike, and then 24,200 and 24,400. On the put side, the maximum openers was at 23,000 strike, followed by 23,500 and 23,300 with the maximum new put option adding at 23,500 strike and then 23,600 and 23,300. Thus, from options data, Nifty's key resistance is at 24,000 level with immediate support at 23,500. So that's all in this video. Hope you all got some information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.